Westpac's rate rise prediction. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article from Yahoo about Westpac's prediction for an RBA rate rise. Westpac has made a major interest rate forecast, saying it expects the RBA to hike much sooner than expected. Now remember when they promised there'd be no rate hikes until 2024 and none of us trusted them? Everyone locked in their mortgage at these insanely low rates because none of us trusted them. The bank is anticipating the RBA will hike rates for the first time on the 2nd of August 2022. The RBA has maintained it will not lift rates until late 2023. Westpac chief economist Bill Evans said developments in the economy prompted the bank to bring forward its predictions. We now expect one hike of 15 basis points in August to be followed by a further hike of 25 basis points in October, he said. Evans said the reason for the change was the bank believed the RBA's economic targets would be hit sooner than the central bank did. Here's a breakdown of where they differ. So inflation, and today the inflation numbers are coming out. I'm just going to have a look at trading economics right here, guys, to see when we're getting the calendar. What is it? Inflation today, 10:30, everyone. 10:30. So we'll have to keep an eye on that. Where do you reckon it's going to go? So currently the RBA is forecasting that underlying inflation will reach the target of 2.25 by the end of 2022. And 2.5 by the end of 2023. However, Westpac is forecasting inflation will reach 2.4% in 2021. Inflation data for the end of last year has not yet been released, and a lift of 2.6% in March 2022. Westpac thinks inflation will hit 2.9% in June this year. This will mean that by the time of the August meeting, the RBA will have observed 3 consecutive quarters in which annual underlying inflation has achieved or exceeded its target around the midpoint of 2 to 3% range, Evans said. So the big 4 banks, wages. The RBA is currently predicting wages growth. Oh boy, and I may have to update this out-of-date chart, guys, but you can see how badly they were. Will hit its target of 2.5% in 2022 and then lift to 3% in 2023. Westpac, however, thinks wages will be slower to reach the RBA's target, with a prediction wages will grow from 0.6% in the September quarter to 0.7% in the December quarter. Evans said the increase in inflation would force the RBA to hike the cash rate, so the lack of wages growth wouldn't halt the need. Achieving the inflation target is a hard condition for any policy change, Evans said, accepting that wage growth has consistently lifted towards a speed we've not seen since 2014 should be sufficient to satisfy the bank that the necessary conditions for a rate increase have been achieved. Based on Westpac's predictions, the bank expects wages will show annual growth of 2.75% for the year to March. Unemployment. As seen in yesterday's unemployment figures, the jobs market is booming. The RBA has previously said it believes the unemployment rate will steadily decline, reaching 4.25% by the end of 2022 and 4% by the end of 2023, a trend that appears to be happening quicker than expected. The most recent jobless figures put the unemployment rate at the lowest level in 13 years to 4.2%. Evans said Westpac was anticipating the unemployment rate would hit 3.8% by the end of this year. We are more optimistic about the unemployment rate than the bank's latest forecast. Currently, the bank expects the unemployment rate to reach 4.25% by the end of 2022 and 4.5% by the month of June 2022. Our same forecasts are 3.8% and 4.1% respectively, he said. So there we go. Let's have a bit of a talk about this one. So Westpac predicting interest rate increases this year. What do you reckon? Are you all surprised? Could you expect to see them? Now, we're not talking big increases. We're talking 0.15. What is it, 0.25? Now, that will have an impact on people's spending. Fixed rates have gone up. This will drive up variable rates. Will it proceed in a big, significant crash in the housing market? I wouldn't bank on it. This isn't going to be the correction that leads to it all falling over. This is going to be manageable for a lot of people. It will be felt, though, by retailers and discretionary spending, where people start to tighten their belts. It'll probably be an overreaction just simply this first ever rate hike, because few people have experienced it. It's been a long time since we've had a rate hike, and people will probably overreact, and so you'll probably see a slowdown in discretionary spending. But I don't think it's gonna, it's gonna start tipping people over. We'll look at in another video today where people are closer to the edge. Sure, there are some, but that may mean they need to learn to budget, guys. Anyway, check out this last video I did just about interest rates going up by the big banks. They're slowly creeping there, and it is. You need to find an extra $50. That's not going to kick you out of your house, but it means some of the luxuries are going to start to disappear. Take care, and I'll see you all in the next episode. Bye for now.